Hi everyone, this is Jamin Kirkwood from Secure Financial Management with your December 2016 economic update. In this video, we'll talk about some of the economic headlines that influenced markets last month and give you some insight into what they might mean for you as an investor. Now, please stay tuned at the end for a required disclosure statement. Well, November was certainly newsworthy, presenting investors with three historic moments. First, Donald Trump won the presidency in a stunning upset that confounded political analysts. Next, the stock market rallied spectacularly off receiving that unanticipated news. The Dow Jones Industrial Average repeatedly closed at all-time peaks, advancing over 5% on the month. Finally, OPEC nations agreed to reduce oil output for the first time since 2008, a development that sent crude prices soaring. On the whole, the latest US economic indicators looked good. Existing home sales maintained their pace even as mortgage rates climbed as a December interest rate hike by the Federal Reserve looked more and more likely. In domestic economic health, consumers spent significantly in October. The latest reports from the Department of Commerce showed personal spending up 0.3% in the 10th month of the year, and both headline and core retail sales advanced. Personal income also increased an impressive 0.6% in October. Consumer confidence also surged in November. The Conference Board's monthly index hit 107.1. jumping 6.3 points from its October reading, an impressive number after analysts polled by MarketWatch felt it would rise to only 102.5. On the hiring front, companies added 161,000 net new workers in October. Unemployment was at 4.9%. The U6 rate, which also counts the underemployed, was at 9.5%, and yearly wage growth reached a 6.5-year peak at 2.8%. On November 17, Federal Reserve Chair Janet Yellen sent a strong signal that an interest rate adjustment was near. She commented that a rate hike could occur relatively soon, as monetary policy appeared to be only moderately accommodative. Only gradual increases in the federal funds rate might be needed to meet an upcoming inflation threat. In global economic health, OPEC countries are the big story. They formally agreed to decrease oil output on November 30, surprising those who thought its tentative summer accord would never be finalized. Saudi Arabia and Iran agreed to major production cuts, and while Russia does not belong to OPEC, word came that it would also agree to cut output if OPEC set per-nation production quotas. In the wake of that deal, Morgan Stanley analysts commented that oil prices might rise by as much as $5 a barrel. India was also a big story this month. India suffered through a massive cash crunch last month as their government shockingly decided to outlaw the country's 500 and 1,000 rupee note. The move instantly removed 86% of India's money supply out of circulation. The move is designed to combat the country's black money problem, which is wealthy households secreting portions of their income in pursuit of tax savings. And looking back and looking forward, November certainly did not play out according to expectations. Who thought Wall Street's benchmarks would rally to all-time highs, especially with the way they slumped before the election? Perhaps December will pleasantly surprise us as well. Assuming the Federal Reserve raises the federal fund rates, can stocks retain some of their impressive momentum through the end of the year? That's the big question. Well, in the near term, the answer is possibly. Some of the investing and economic factors that garner the most attention will be GDP, consumer spending, consumer confidence, hiring, and earnings growth. They've been quite positive recently. So yes, this bullishness may persist through the end of the year. On the horizon, there is the fear that accelerating inflation could keep the bulls in check. That could be something to worry about as 2017 unfolds. Well, that's it for the December economic update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Once again, this is Jamin Kirkwood with Secure Financial Management, signing off for the month of December 2016. Now, as always, please remember that nothing we talk about here should be considered a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 210-428-6250. We'd be happy to speak with you.